In today's video, I am going to be showing you a simple strategy that I use to generate money consistently in the forex market. So today I'm going to talk about the candlestick pattern. Candlestick pattern was invented by the Japanese, and so many forex traders are using the candlestick pattern to identify when to place a trade. So in today's video, I'm going to be showing you how you can combine both the shooting star and the bearish engulfing pattern together to get a sniper entry. Have it at the back of your mind that the shooting star and the bearish engulfing pattern is a bearish trend reversal pattern. It tells us when a bearish reversal is about to happen. For instance, if the market is in an uptrend and you identify a bearish engulfing pattern at an area of value in an uptrend, you should know fully well that the trend is about to reverse into a downtrend. So the essence of the bearish engulfing pattern and the shooting star is to help us to know when a new downtrend is about to begin. It helps us to know when an uptrend is about to end and when a new downtrend is about to begin. So why I am combining the bearish engulfing pattern and the shooting star is to let you know that these two candlestick patterns are almost the same, right? Just that they work in a different time frame. For instance, in a lower time frame, you can see the bearish engulfing pattern, which is a two candlestick, while in a higher time frame you can see a shooting star, which is a one candlestick pattern. So they both candlestick work the same thing. They give us the same signal, right? They tell us that the uptrend has exhausted, the buyers are weak, and the sellers are about to step into the market. So if you are trading a different time frame, you should be able to know how to identify these candlestick patterns in different time frames. Like I said, what the bearish engulfing pattern does is the same thing that the shooting star does, right? Just that you can identify them in different time frame. For instance, you can identify the bearish engulfing pattern in a 1 hour time frame, while you identify the shooting star in a 4 hour time frame. So for you to be able to know how to trade this pattern profitably, you need to understand how it works. So that is what you are going to learn in this video. I'm going to share with you how you can simply identify a bearish engulfing pattern and a shooting star, and you will be able to understand how it works on a chart. Now I want you to have it at the back of your mind that the bearish engulfing pattern and the shooting star only works when you identify them at an area of value. So what is an area of value? An area of value can either be a support or a resistance level that can act as an area of value. So once you identify the bearish engulfing pattern and the shooting star at an area of value, right, you have enough confidence that the trade will work according to how you want it to do because it appears at an area of value. But if you identify the bearish engulfing pattern or the shooting star anywhere aside from the area of value, you might get wrong signal. So that is why you have to look at the bearish engulfing pattern and the shooting star at an area of value. So how do you do that? Now, if the market is, let's assume the market is in an uptrend, right? The market is in an uptrend. So you are looking to identify the bearish engulfing pattern at the resistance level. So once you identify the shooting star or the bearish engulfing pattern at the resistance level, you will have higher probability that the trade will go in your direction, right? So that is why you need to understand that the candlestick pattern work with support and resistance. You don't just identify it anywhere. You need to identify it at an area of value. And since we are talking about the bearish reversal, we should be looking at the resistance level, right? We should be looking at the resistance level because that is where price tends to reverse, right? If a price is in an uptrend, the price tends to reverse at the resistance level. But if a price is in a downtrend, the price tends to reverse at the support level. So what gives us the confidence that the price will reverse is when we identify a candlestick pattern. And for the fact we are talking about the bearish reversal, we are looking at the bearish engulfing pattern and the shooting star. So if the market is in an uptrend and you are waiting for a reversal, right? You want to know if the uptrend has exhausted, you want to get a bearish reversal, you should look at the resistance level. And once you identify the resistance level, the next thing you should look at is the bearish engulfing pattern or the shooting star. And just like I said, the two candlestick patterns act the same, they work the same, just that they work in different time frame, right? So if you open your chart in the 4-hour time frame, you can easily identify the shooting star at a resistance level. But if you open your chart at the 1-hour time frame, you can easily identify the bearish engulfing pattern at the resistance level. So you can clearly see that the candlestick pattern work the same, just that you can identify them at a different time frame. So let me give you an example on a chart so that you understand what I'm talking about. Now look carefully on this chart now, right? This is what we call a bearish engulfing pattern. This is what we call a bearish engulfing pattern because the price was formerly in an uptrend. You can see this green candle telling you the price was formerly in an uptrend, right? Now the price got to an area of value which we act as resistance level, right? And the price now changed into what? Into the red candle, right? And then the price now went down and engulfs below the opening of this green candle, telling you that the sellers are strong in the market and they were able to push the price below, right? So this now acts as a bearish engulfing pattern. So you can easily identify this pattern in a 1-hour time frame, right? You can identify this pattern in a 1-hour time frame, right? So but if you go to the 4-hour time frame, you will see something else. And what will you see? You will see the shooting star. So for you to be able to trade it profitably, you should be able to identify the bearish engulfing pattern at a 1-hour time frame, right? So in a 1-hour time frame, you should be able to identify a bearish engulfing pattern, right? So you can clearly see that the price was previously in an uptrend. So this green candle symbolizes that the price was in an uptrend, right? So the price opens here, right? And the buyers push the price all the way to this point, telling you that the buyers were in charge of the price. So what happened? This place now tends to be a resistance level, right? So when the price closes at the resistance level, it opens here, and instead of going up, the price now starts heading down. That is why you see this large red candlestick. So what happened now is that the price went down to the extent of closing below the opening of this green candle, right? So this is where the candle closed, right? It engulfs below this green candle. So this tells you that the sellers have stepped into the market. So this is what we call the bearish engulfing pattern. So once you identify this pattern in an uptrend at the resistance level, you should be able to know that the sellers have stepped in and they are going to push the price down, right? Because if you clearly see that the price opened here and the buyers were able to push the price up to this point. So this point now acts as a resistance level, right? So once the price closed, the sellers now step in and were able to push the price down, which formed this red candlestick. So they pushed the price to the extent that the price closed below the opening of this green. So the price closed below it, it engulfs below it, telling you that the sellers are very strong and active in the market. That is when you discover this candlestick pattern. So once you identify this candlestick pattern in a 1-hour time frame at the resistance level during an uptrend, right, you should know that the trend is going to reverse to a downtrend, right? So if you now go to the 4-hour time frame, you will now see something like this. So if you go to the 4-hour time frame, you will see something like this, right? So that is why I say this plus this gives you this, right? So at the 1-hour time frame, you might see something like this, while at the 4-hour time frame, you might see something like this, right? Still the same thing, telling you that the buyers were in charge, which tells you that this empty wick was formerly green. That is to say, the buyers were actively here. So at the higher time frame, like the 4-hour time frame, you can clearly see that the candlestick pattern that you discover at the area of value is the shooting star, while at the lower time frame, like the 1-hour time frame, the candlestick pattern you will discover at an area of value is the bearish engulfing pattern. So like I say, these two candlesticks work almost the same, right? So in the 4-hour time frame, you can see the shooting star because formerly the price opened below somewhere here. This is where the price opened, right? So when the price opened here, the buyers were still in charge. They pushed the price all the way to this level, which is the same thing with this, right? So what happened? The sellers now step in and then push the price down, right? So you can see the big red candle at the lower time frame, like the 1 hour, telling you that the sellers are pushing the price down, while at the higher time frame, like the 4 hour, you can see this rejection. This rejection tells you that the sellers are now pushing the price down, right, until the price engulfs the green, right? The green shadow disappears, and then we now start seeing the red shadow, right? Until the green color disappear, and we now start seeing the red color. So the red color now tells you that the sellers are fully in charge of the market. So you can clearly see that the price now closed below the opening, right, telling you that the sellers are active in the market, the buyers are weak, the sellers are strong, right? So what you simply do, you wait for this candle to close, right? Then you place your sell trade. So once this candle closes, you simply place your sell trade, right? The same thing applicable to this. Once this candle closes, you simply place your sell trade. So you can clearly see that both the bearish engulfing pattern and the shooting star work the same, just that you can identify them at a different time frame. Like I said, you can identify the bearish engulfing pattern at the lower time frame, like the 1 hour time frame, and you can identify the shooting star at the higher time frame, like the 4 hour time frame. Let me give you another example for you to understand what I'm talking about. Now let's assume let's say this was a 4 hour time frame, right? Or this was a daily time frame. Let's say this was a daily time frame, right? This was a daily time frame, and you know that in a daily time frame the price might be ranging, but in a lower time frame the price will be trending. So this movement from here, from this place to this place, can be a trend in a lower time frame. Have it at the back of your mind that this is a daily time frame, right? This is a daily time frame. So a movement from this point to this point is a trend, it's an uptrend, right? So now let's assume that the market was in an uptrend from here. The market was in an uptrend, right? So now this place acts as a resistance level because this is where the market could not break above. The market got to this point, got rejected, got to this point again, got rejected, right? So this point now becomes what? A resistance level, right? So you can now see that the market was clearly going up in an uptrend, right? So the market now got to this resistance level, right? You cannot rush and place a sell trade because you don't know whether if this level will be broken, because the level was tested once, tested twice, right? So you don't know whether if this level will be broken, right? Because if you say, okay, let me place a sell trade since the price has gotten close to the resistance level, you don't know what will happen, right? Because the price might go up again and hit your stop loss. Like let's say this green candle, once this green candle closes and you decide to place a sell trade at the close of this green candle, you can say that the candlestick is very close to the resistance level. Let me place a sell trade, right? Because when price gets to a resistance level, it gets rejected, right? So if you place a sell trade at the close of this green candle, what happens is that the price can go up and hit your stop loss, right? So you don't know whether if the price is going to break the resistance level or not. So for you to be sure, you need to wait for a bearish candlestick pattern, right? Either the bearish engulfing pattern or the shooting star, for you to confirm that the resistance level is still strong and the sellers are still active in the market. So that is why you need to wait for it. So since this is a resistance level and this candlestick closes, you have to exercise patience to see what will happen at this resistance level, right? So you can clearly see now that the price now opened here and the buyers push the price all the way to the extent that the price broke above the resistance level. And then what happened? The price now got rejected, right, and formed a shooting star. So this is what we call the bearish reversal pattern, right? The bearish reversal pattern. So the price now got rejected, right, and formed a shooting star. So what you do, you simply wait for the close of this candlestick for you to place your sell trade. So once this candlestick closed, you simply place your sell trade below and your stop loss should be above the resistance level, right? Then you can be able to ride this massive trend. Do you see how it happens, right? But if you are impatient, right, for the fact that the price has gotten close to the resistance level, right, you just say, okay, let me wait for this green candlestick to close so that I cannot place my sell trade. And once this green candlestick closes and you place your sell trade, have it at the back of your mind that this is a daily time frame, right? So once you place a sell trade at the close of this big green candle, the price might go up again, and what happened? It might hit your stop loss, because this is a daily time frame. This movement alone is very large, right? So for you to be at the safer side, you sincerely need to wait for a bearish candlestick pattern, a bearish reversal candlestick pattern to form for you to confirm that the price cannot break above the resistance level. And just like I said, you can clearly see the rejection here, right? You can see that the price went up and got rejected, forming this wick. So this now forms a shooting star, right? So in the daily time frame, you can see something like this, right, a shooting star. But if you go to the 4-hour time frame, you can see the bearish engulfing pattern, right? So this one candlestick that you are seeing now, this shooting star that you are seeing now in a daily time frame, if you go to a 4-hour time frame, you can see maybe 2 or 3. You can see something like a bearish engulfing pattern, right? That is why I said the shooting star and the bearish engulfing pattern work the same, just that you can identify them in a different time frame, right? So if you wait for this shooting star to form, you'll be able to ride this massive trend. Let me give you another example. Now this is a dynamic resistance level, right? You can clearly see that the price is in a downtrend. So this is a dynamic resistance level. So what you do is you wait for the price to come to an area of value, right? This moving average line is acting as an area of value. It's acting as a resistance level. So you have to wait for the price to come to the area of value, right? So this retracement can be a trend in a lower time frame, right? This might be an uptrend, right, in a lower time frame. This movement can be an uptrend in a lower time frame, right? But in a higher time frame, you can clearly see that the price is heading down. But in a lower time frame, just this large green candle can act as an uptrend. So what you simply do is you wait for the price to come to an area of value, which is this moving average, this blue line, this moving average. So once the price gets to this moving average, you don't need to place a sell trade immediately, because you don't know whether if the price will break above the moving average. Because if the price breaks above the moving average, then the uptrends continue, right? So you simply wait, exercise patience to see whether if you can get a reversal candlestick pattern. So once you identify a reversal candlestick pattern at this resistance level, there you can now confirm that the downtrend is still in progress. So you can clearly see that the price now went up to the moving average. So the price now went up to the moving average. What happened? We got this huge red candlestick. So this acts as a bearish engulfing pattern, right? You can see the price was moving up, got to this moving average line, and what happened? We saw this large red candlestick. So once you identify this red candlestick, you can clearly see that this is a bearish engulfing pattern. So what you do, you wait for this candlestick to close, and then you place your sell trade, and your stop loss should be above the moving average line, right? So by doing that, you'll be able to ride this trend, right? But if you decide to place a sell trade once the price got to the moving average, you don't know whether if the price is going to break above the moving average and continue heading up. So for you to be at the safer side, that is why you need this reversal candlestick, this bearish reversal candlestick, to confirm that the price will reverse. That is why you need the reversal candlestick. So in a lower time frame, you can get the bearish engulfing pattern, while in a higher time frame, you can get a shooting star. So this is how this strategy works. Very simple. So with that, you'll be able to combine both the shooting star and the bearish engulfing pattern to get a sniper entry. So that is all I have for you for today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to this channel for more educative content like this, and also don't forget to turn on the notification icon to be notified whenever I update new content. I will see you again in my next update. Bye.